Hello, everyone. Welcome to the market opening bell on Wednesday, September 10th, your 10-minute guide to the stock market. Hong Kong stocks rose on Tuesday following positive external markets. The Hang Seng Index opened 77 points higher and later surged by up to 394 points to 26,027, marking a near four-year high. It closed up 304 points or 1.2% at 25,938. The X-share index gained 120 points or 1.3%, closing at 9,242, while the Hang Seng Tech Index rose 74 points or 1.3%, closing at 5,828. The total market turnover was $294 billion. Southbound funds net bought $10.231 billion in Hong Kong stocks, including net buys Alibaba 4.234 billion, Ping An Insurance 539 million, SMIC 482 million, Southern CSOP Hang Seng Tech ETF 456 million, Zhou Liu 281 million, Kuaishou 238 million, Li Auto 171 million. Net sales include Xiaomi 1.732 billion, Meituan 848 million, Ecoso 458 million, Tencent 238 million, Laopu Gold 144 million, Popmart 126 million, Remigen 119 million. Statistics show southbound funds have net bought Alibaba for 13 consecutive days, totaling $28.902 billion. Technically, the Hang Seng Index broke through the 25,700 resistance level and briefly surpassed 26,000. The short-term trading range is expected to shift to 25,700 to 26,200. Mainland China's three major indexes closed lower. The Shanghai Composite Index fell 17 points or 0.5% to 3,807. The Shenzhen Component Index dropped 156 points or 1.2% to 12,510. And the Chinex Index fell 66 points or 2.2% to 2,867. The combined turnover of Shanghai and Shenzhen markets was 2.1184 trillion yuan, down 300.2 billion yuan from the previous day. The renminbi central parity rate was set at 7.1008 to $1, up 21 pips from the previous day, hitting a new high in over 10 months. In Hong Kong, Alibaba rose 3.4% to $141.9. Today marks Alibaba's 26th anniversary. Chinese media reported that Alibaba will hold a press conference in Hangzhou with a major business announcement, with many media outlets invited to attend. Healthcare platforms saw strong gains. Ali Health surged 10%, JD Health rose 6.4%, and Ping An Good Doctor gained 3.1%. To implement the regulations on the supervision and administration of online drug sales, the National Medical Products Administration (NMPA) drafted the guidelines for compliance in online prescription drug retail. Draft for comments to enhance compliance awareness and capabilities of relevant parties and regulate online prescription drug retail. The draft requires online drug retailers to obtain a drug business license, comply with laws, regulations, and standards, and prominently display qualification information on their website or main business page in a clear, readable format. This is another significant long-term positive signal for the internet healthcare industry. Following the regulations on online drug sales, it marks a new phase of refined management and high-quality development. Leading platforms like JD Health, Ali Health, and Ping An Good Doctor have advantages in IT systems, compliance teams, and regulatory communication, enabling faster adaptation to new rules. Shanxi Province launched the Senior Care Consumption Season, offering a 2025 home accessibility product subsidy of 30% of the product price, up to 18,000 yuan, to promote healthy aging consumption, develop the silver economy, and improve the quality of life for seniors. JD Health, as the designated platform, will provide seniors with professional accessibility products like hearing aids, mobility aids, bedding aids, bathing aids, toileting aids, health monitoring devices, respiratory aids, and TCM therapy devices to meet comprehensive home care needs. Since the event began in late August, JD Health's accessibility product sales have performed strongly, with stair climbing wheelchairs and mobility walkers seeing over 70% year-on-year growth. SMIC announced it will issue new A shares at 74.2 yuan each to acquire the 49% minority stake in its subsidiary, SMIC Northern, a 12-inch wafer fab, at a 35.4% discount to its A-share closing price, but a 39.5% premium to its Hong Kong closing price. This acquisition is expected to boost SMIC's profitability. SMIC's A shares fell over 8% upon resumption of trading yesterday, while its Hong Kong shares rose 0.2%. The three major U.S. stock indexes all hit record closing highs on Tuesday. The Dow Jones Industrial Average rose 196 points or 0.4%, closing at 45,711. The S&P 500 index gained 17 points or 0.3%, closing at 6,512. The Nasdaq Composite Index increased 80 points or 0.4%, closing at 21,879. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, rose 119 points or 1.5%, closing at 8,230. Apple held its annual product launch, introducing a new generation of iPhones and AirPods Pro with AI translation features. The market showed little excitement, and the stock fell 1.5%. Nvidia rose 1.5%. Tesla gained 0.2%. Reports indicate Tesla is considering several California airports, including San Francisco International Airport, San Jose Mineta International Airport, and Oakland International Airport, as locations for its robotaxi ride-hailing services. Alphabet climbed 2.5%. Its Google Cloud division has $106 billion in unfulfilled customer contract commitments, with at least 55%, approximately $58 billion, expected to convert into revenue over the next 2 years as services are delivered. Alphabet's latest quarterly results showed its cloud division's revenue rose 32% to $13.6 billion in the second quarter. Oracle announced after the market closed that its fiscal first quarter revenue ending August grew 12% year-over-year to $14.93 billion, slightly missing expectations. Net profit remained flat at $2.93 billion, with adjusted earnings per share at $1.47, slightly below the market's $1.48 forecast. However, the company disclosed its remaining performance obligations reached $455 billion, a 3.6-fold increase year-over-year, driving its stock price up over 22% in after-hours trading. GameStop reported its second quarter profit surged over tenfold year-over-year to $169 million, with adjusted earnings per share at 25 cents. Revenue grew 22% to $972 million. As of the end of the second quarter, the company held $529 million in Bitcoin, and its stock rose over 4% in after-hours trading. The U.S. Bureau of Labor Statistics revised down non-farm payroll additions for the 12 months ending March last year by 911,000 jobs, the largest revision since 2002 and exceeding market expectations, signaling a weakening U.S. economy. Our stock pick today is Zhou Liu Fu, stock code 6168. Zhou Liu Fu is engaged in the design, development, and sale of jewelry products, including gold jewelry, diamond encrusted jewelry, and other products. Its business model integrates jewelry product development, procurement, franchising, and brand operations, connecting all aspects of the industry value chain. The company boasts a nationwide sales network and a highly recognized brand. For the first half of the year ending June 30th, 2025, the group achieved revenue of 3.15 billion yuan, a 5.2% increase year-on-year. Notably, online sales channels generated 1.631 billion yuan in revenue, up 34% from the previous year, driven by optimized operational efficiency, enhanced online capabilities, and deepened partnerships with e-commerce platforms, which expanded the scale of online sales. Additionally, the strategy of offering high-cost performance products to attract younger consumers further boosted online revenue growth. Amid rising gold prices in recent years, the group has explored lighter and more fashionable product designs, leveraging strategies such as IP collaborations and combining gold with other materials to create accessories. These efforts aim to enhance the composite attributes of products and brands, fostering greater customer loyalty, higher gross margins, and improved profitability. In the first half of 2025, offline retail sales volume and revenue from marketplace products grew by 73.2% and 44.4% year-on-year, respectively, while the gross margin for offline retail increased by 12.2 percentage points to 41.7%. This provides strong guidance for the group to further explore a virtuous cycle of complementary product, brand, and operational development for brand upgrading. Facing macroeconomic uncertainties and pressure on terminal consumption, the group continues to encourage terminal stores to optimize and adjust their layouts, implementing a survival of the fittest approach for sales outlets while focusing on improving store operational efficiency. In the first half of 2025, the group net closed 272 stores. As of June 30, 2025, the group operated 3,760 franchised stores and 97 self-operated stores, including 21 sub-brand stores. By city tier, the store structure became more balanced, with nearly 50% of stores located in Tier 1 and Tier 2 cities. By location type, the store structure was further optimized, with over 55% of stores situated in shopping malls and department stores. The average store size also increased to approximately 110 square meters. Looking ahead, the group will increase investment in product innovation and R&D, focusing on popular IP designs and trendy manufacturing techniques. It plans to launch upgraded versions of brand-specific product series such as Jiuhua Dayuan and Yihe Xianjing to further promote Eastern culture and the national trend style. Additionally, the group has several new series in development, emphasizing popular techniques like point diamonds and filigree. filigree. The group will adopt a multi-ecosystem expansion strategy, including franchised, self-operated, joint venture, high-end, and overseas stores. It sees significant growth potential in overseas markets and plans to actively expand in Southeast Asia, having already opened 6 stores in Thailand, Laos, Vietnam, Cambodia, and Malaysia. Further expansion is planned in Singapore and other regions with a target of opening 10 overseas stores by year end. Recommended buy price 48 Hong Kong dollars, target price $52.5, stop loss $45.5. I do not hold the aforementioned stock.